Savvy Business Radio, drawing out the best from our guests with our host, Christina Nichman.
Our guest today is Joy E. Schoffler, Chief Strategy Officer of Upside Avenue. She's an experienced leader within the global financial technology community and has also been able to leverage some investment strategies along with powerful referral networking system that drives ongoing income that she doesn't have to work for. Today, she's going to share some tips on how you can build your own passive income. Find out more about Joy and Upside Avenue at upsideavenue.com. Hi, Joy. Welcome to Savvy Business Radio. How are you this afternoon?
I'm wonderful. Thank you so much for having me.
Oh, you betcha. You are going to help our audience with a very important topic. We talked before, a little bit before the interview. Many entrepreneurs are spinning their wheels. They have this gift. They start a business doing whatever their gift is. And, often it's not working out the way they want. I know I had that problem. I got started thinking, hey, this would be a piece of cake. I've done this for years. I'm an expert at this. And you get going. You're spinning your wheels like a hamster on a wheel, and you're not really having you're not having the success you want, and maybe the money isn't coming the way you want. But you've realized, as well as a lot of entrepreneurs, that you really need to have more than one stream coming in, because even if you're fabulous at what you do and you do get business in, it isn't always consistent. There would be times of the year, at least here at Savvy, where, less advertising comes in, and having those extra streams of income, whether it be passive or otherwise, leaves that you're not always struggling and that you can do those things like take a vacation with your family. You are the Chief Strategy Officer of Upside Avenue, and you're going to share a little bit about your backstory on what brought you to entrepreneurship and ultimately allowing you to sell your business and have the life you want. Share a little bit about your backstory.
Yeah, thank you so much. So this is really a topic that is so near and dear to my heart, because as an entrepreneur and as somebody who owned a business and just somebody in finance as well, it is so incredibly critical for your business, actually, that you have multiple streams of income. There was a lot of times when I owned my company, my former company, Leveraged PR, which I ended up selling almost 2 years ago to Caliber Corporate Advisors. There were so many times where, there was clients that they really weren't a fit for my business. And early on, I'd take them on anyway, just because I needed the revenue streams. And then in the end, it would actually impact my business negatively. Or maybe I could take a client on that was a really good strategic long play, but didn't have the revenue behind it in the beginning. Mm-hmm. So having passive streams of income not only enables you to take care of your family better and make, better medical choices, better education choices for kids and your loved ones, and to be able to take a break and, do all the things that you want to do in life. But really, it is so important for the health of your business, is what I found personally, to have options. So,
yeah, I just heard, what I heard there is you mentioning some clients are great long-term clients, but, for whatever reason, they're also small business owners and maybe can't pay within 30 days. And if that's your only stream of the customers you have in your base for that one business, and they're not paying within terms, then here you are left like, oh, how am I going to make my bills? And so, yeah, I get your point right there, where if you build several different pockets or several different avenues of revenue, that way one revenue is not coming in as steadily, you have revenue coming in behind it.
Absolutely. And when I owned Leverage PR, one of our clients was South by Southwest, which is one of the biggest technology and music festivals in the world. And unfortunately, they didn't pay phenomenally well. However, there were so many great clients that came from my work with them that did pay well. However, I had to make kind of the long-term investment of taking them on, knowing in the coming years that would make a very large impact on my business, to have them on my client list. And so, sometimes there's things as a business owner you can make, if you have some revenue flexibility and some extra kind of streams coming in, you can make different decisions, which can have a huge impact on your company's overall performance.
Mm-hmm. Now, when you talk about building several streams of income, were you building those through different products through one company, or were you building several different types of, like, were you selling, real estate on one side and investing there and then doing PR? How did it look for you that you built those several avenues?
Yeah, great question. It's kind of that as a business owner, especially with a small business owner, it's really important to focus, and I know that I've heard on your other radio shows where you talk about that as well.
Yeah.
And so I kind of made the decision of, I'm going to focus on what I do, and I'm going to focus on doing it the best that I can, and became like extremely laser focused. And that led to additional pockets of, any time that I had additional revenue coming in, or any time that I had profits, instead of hiring more staff and expanding more quickly, I'd hire consultants. Instead of taking a raise, me and my husband made a commitment to just live on one person's salary, and stayed in the same house in the same neighborhood for multiple more years and instead of buying a bigger house or a better neighborhood, we made a lot of short-term sacrifices so we could have better long-term outcomes. So every time that I had extra money on the table, I would set up, I kind of call it the bucket system. And so what I would do is I would fill my buckets in order of priority.
Mm-hmm.
So I would fill my emergency money bucket first for the business as things got in. And that would be, your short-term kind of, something comes up, payroll, a client, leaves or something happens, or emergency. So I got that up to about 2 months expenses just to fill that emergency bucket, and had that emergency bucket for my personal family as well, because it's often when you get in that emergency situation where you tend to make very bad long-term financial decisions, which can have a really bad impact.
Yeah, you're basing it on desperation at those points. And then you're really not thinking of a clear mind. You're thinking, I need this money now. And in fact, I heard about a business lecture this week of someone I admire very much, who had embezzled from his company a good slew of money because of a decision he made, because he thought, this is going to be such a great deal. They just went ahead with it and didn't really look at, get a lawyer to overlook the contract. And it turned out to be a really bad deal, and he had money embezzled. And so there's times like that. You don't want to be in a moment of desperation where you make any move just because it sounds great right at that moment to later regret it.
You're so right. And I think so many business owners get themselves in that place because they're constantly doubling down. Mm-hmm. And so I would say kind of tip number one is to fill your emergency buckets first, both at home and within your business. That's going to give you a little bit of that cushion, that emergency, so you're not making bad long-term decisions. And you're really able to keep, and when you get additional streams of capital too, so many people, because they don't have that emergency bucket and they don't fill that first, they'll go cash in those long stream assets that they have that are producing capital, because they didn't, and they'll sell them often at a discount because they didn't have that emergency bucket. So my advice and what I've lived by is 2 months emergency, filling that bucket first before you move on to your kind of long stream, building the long stream terms of revenue. And I actually take a 3-bucket approach personally, where it's that bucket, max out any taxable savings. So maxing out your SEP as a business owner. If you've got a 401k, maxing that out, taking all those tax advantages so that you're not paying high income tax. So you're only paying your fair share. Yeah. And then starting to build up that long-term savings, but diversifying it out of your business field with somebody who's really good there. So while I had a PR firm, I was in the commercial real estate business before, and I invested a lot in multifamily apartments before starting my company. So as I was growing my business and as I had additional revenue streams coming in, or, I'd make more and I'd fill those buckets up first. And then what I would do is I would do a high interest yield savings account and take that money once I built enough up and make investments into apartment complexes.
Yeah, this is tremendous for going here, because our culture more and more has kind of pushed the non-putting away, stocking away. And as one entrepreneur I heard say, he didn't really call it saving, he calls it storing the money. And he stores it to a certain point so that he can then invest it and expand it. But we're kind of taught in our culture, live for today. You might not be here tomorrow. I had a friend of mine many, many, many moons ago who was a doctor, and she would get every bit in. And then when she would get, from a bunch of patients, you got to wait for the insurance money. She would get a slew of money at once. And she's like, once I came to her house, she threw the money up in the air and she's like, where should I go in the world to travel? And unfortunately, years later, she was broke because she hadn't socked away or stored away like you store nuts when you're a squirrel for a rainy day or when things are difficult, like you said, your emergency fund. And so our culture often doesn't hit on that. It talks about live for today, don't think about tomorrow. But that's not only dangerous for your business, it's dangerous personally. Now, if you're a business owner and let's say you don't have slew coming in, how did you decide how much to put away for the emergency as opposed to everything else? And did you work first with one bucket, the emergency bucket, and then take care of the other buckets?
Absolutely. Great question. So I did take care of kind of some of the emergency first, but what I would do is anytime we got a bonus in or any unexpected money, we'd kind of live by that really strict budget. And anytime there was unexpected money, what I would do is I would put a third in, use a third of it. So we would give ourselves a reward or pay off debt. So a third could either be used towards, and we would try never to get into any credit card debt or anything like that. We tried to pay it off every month, but still, it crops up here and there after a vacation or whatever. And so we'd either pay off debt or get to spend a third, so maybe for any sort of consumption, a vacation or whatever, we would put a third in short-term savings, either short-term savings or investment, just if the bucket wasn't full. Okay. If the short-term savings bucket was okay at 2 months worth of backup, then what we would do is we would just go ahead and invest it all. And what's the great thing about one of the reasons that I came to Upside Avenue and helped them launch this, we're part of a 17-year-old investment firm who historically only worked with accredited high net worth investors. And the minimum investment was typically about $100,000, which is a long time of building up to get there for me, at least.
Yeah.
But I helped them launch a company called Upside Avenue, which is a REIT, which actually allows you to be able to go and invest as little as $2,000. So the cool thing is like anytime you have a little bit, now when I have my little bit of extra money, instead of having to wait until it gets built up to a big bucket of money and kind of not making dividends all the time, I'm able to put it in our REIT and earn 12 to 15% per year on that money, as opposed to having to wait to put it in one project when, I kind of built that up. But investing in apartments all this time, what that enabled me to do, because we own about 8 of them at this point, pieces of 8 of them, not the whole thing.
Yeah.
But it allowed me to have passive income streams coming in to where, there was times when business got, slow, or we lost a client because they were having cash flow issues or something happened, or I needed to hire somebody right away, instead of having to ever go get in debt or take investors or do these other things, I was able to stop paying myself a salary or decrease my salary, and live off the passive streams of income. And then, you know, when these things, because they typically, the worst I ever did was double my money on an investment. So because of that, I was able to then get bigger chunks as those apartment complexes sold, and then turn around and use this money to diversify and buy several. And so there's just a lot of really cool short-term things. Like now we're looking at being able to afford, a house that we've really been kind of saving towards, because one of the apartment complexes they invested in 8 years ago is now selling, and it's grown enough to that point. So it's just, there's so many options that it gives you. Not just investing in apartments, but just doing the short term and, you know, making those short-term decisions and choosing your future self can have some really cool benefits in the future.
Yeah, I love touching on this topic, because I think, and we've gotten to the point, and we talked a little bit earlier about this self-gratification type of a culture that we live in the United States. And it's great to reward yourself. You know, you work hard, you want to reward yourself. I remember in one of my old jobs, my boss was really always miserable, and she would go out and buy the most priciest, like mink coat or something, you know, once or twice a year, like an expensive purchase like that. And she's like, well, I deserve it. I work hard. But she was still miserable. The mink coat didn't make her happier. And, you know, sometimes it's more about, instead of using every bit you get, look at ways that you can make your life happier by, you know, investing in your health or investing in different parts of your life, including your finances. But what I like about this is I think often people think that in order for me to get started with investing and building and expanding, I need to be rich first. And that's not true. What I liked about what you just mentioned, there are things that I've heard of other people who came on my show too, mentioning different investment projects where you go in it as a community. And it could be in real estate, or it could be another a venture where you come at it as a strategic alliance where you all come in it together and you all pitch in a little money, a little finance, a little expertise, and you build it together where you're now investing not by yourself. It's not like, you know, you have to do it all on your own shoulders, but you go in with a group of people you can count on, and you build that expansion together.
Absolutely. And I think that the cool thing about some of these online companies, so we're a 17-year-old company. We've got 160 employees, and all we do is real estate. So we have a tech-enabled company at Upside Avenue that does allow a lot of different people to be able to invest as little as $2,000, regardless of whether they're accredited, meaning they make over $250,000 a year, have a net worth of $1 million, excluding their primary residence, which before was the only way you were legally allowed to invest. Now everybody's able to invest, but you can be with a team. So we've invested over $1.2 billion in capital. Portfolio wide, we've had average returns of 24.8% to our investors. And we've been through both good and bad cycles. And the worst that we ever did on any property was 8%. So we've been through all of these cycles. We have a team who are true experts. And so it's really the ability to go in and be able to invest smaller amounts, but with a very established team. Yes. And now if you just invested like in anything, right? Like with compound interest, if you're hitting about the 13-14% range and you invest $10,000 over 20 years, that's a $66,000 return with compound interest. If you compound it and reinvest dividends. So there's some pretty sizable results with anything you invest if there's compounding of the dividends.
Yes. And I like that you say, because often we hear the word compound when it comes to debt. Oh, you have a credit card and compound interest. But we don't think that the same thing happens when you invest and you're able to invest smartly. You can compound and expand your investment to, now this is phenomenal, 24%, even 8% at the minimum. How many times can you say you've opened a bank account and, oh yeah, put in 2,000, you get 8%? No, never. You're lucky if you get 0.5% sometimes. So,
well, I'm sorry, go ahead.
Yeah, no, go.
We're projecting about 12 to 15% total returns.
That's awesome.
Per year, with 6 to 8% of that, and that's after fees. 6 to 8% of that coming through dividends, and that's based upon historical performance. So we took our down cycle portfolio wide, and we said, okay, based upon historical performance and the types of assets we're investing in, we think this is a safe target. And so we invest in a portfolio of both debt and equity. So we're deploying into 3 projects this next month, one of which is a loan. So it's a second position loan on a 476 unit, huge apartment complex in Irving, Texas. And so we sit behind the equity. So there's people who are going in and investing 20% of that equity. And then we are, we're in that second position debt earning 8% interest. And so there's 8% going to the REIT for that project. We have another project that we already own that we're able to take a position in that's returning 8.5% cash on cash to investors right now, and is likely to earn about a 16.8% on the back end return. And then a third project, which is earning 10% cash on cash and has for the last year, it's earned over 10 with a projected return in the 19% range. So, we're only investing in already built products that have cash flow in place right off the bat, where they're typically 15 to 30 years old as far as the age of the asset. So we're not investing in brand new construction. We're not investing on the coast. It's the Sunbelt region of the U.S. So we're pretty, we feel like we could go into a recession. And so we're really looking at this as more of a stabilized property play in both debt and equity, because, the stock market's been so crazy. Yeah. If that's where you're putting your, if you're relying on dividends from the stock market for your, income, that's a pretty wild ride.
Yeah.
And so, apartments, while things can always happen to them and it's not guaranteed and it's not 100% foolproof, when things are bad, people go rent apartments. It's a little bit, they don't buy a house. They don't go to the fancy high rise. They go to garden style apartments. So that's, I don't know. I personally love it and have a passion. Obviously, I work there, but
yeah. Well, what I'm getting, and it is true. I mean, I had a friend who was investing in her 401k, putting as much as her salary she could put into it, and then we had 2008 happen, and she lost almost everything in her 401k, and she's like, "This is bull," and she was so upset. And I said, "Don't cash out. Things are bad, but it's not going to stay bad forever. So just keep it there." Because she was like, screw it, no. But I just didn't want to see her just lose everything. But you're right. There's even people who had, just before it plunged, went and bought a house that, it was sad because banks were giving loans to people they had no right giving loans to that couldn't afford it. And then when the bubble burst, bam, all these foreclosures, which were great for people who were investors, but not great for people who were living in the private homes. But you're right. The one thing about rentals that people always need a place to live. There might be other things that go under if there's a depression or recession, but you always need a place to live. So you're always going to have someone to rent to. So there is a passion there. But let's talk a little bit, because you've also helped people with leveraging your referral system. I talked a little bit and mentioned earlier a little bit about strategic alliances and building with other people, not putting it all on your shoulders, but you can build a network referral system that can also help you grow your income. Share about that.
Yeah. So with referral systems, there are so many, a lot of times as business owners, we build phenomenal bases of, phenomenal networks for our own line of business. But, there's so many, once you build a network is so valuable. Your database as a business owner can have incredible power. And so, just in the PR business, for example, we set up referrals with multiple different types of businesses. Now that obviously I work in an investment firm, Upside Avenue, and we do multifamily apartments and have a REIT, but I'm still able as a business owner when I looked at selling to set up a system where it was a win-win. I was able to still refer business to them and, take those commissions to build another stream of revenue for myself now. But even as a business owner, I did PR. I didn't do advertising. I didn't do some of these other lines, but I set up referral streams where when there was clients that I wasn't serving, I was able to turn around and refer them. And, there was times in my business where I was making $50,000, $60,000 a year just on referrals that I made to other business owners. So really keeping an eye out of how else can you take your current database and mine it. And nothing is more important than building your database. That is, as a business owner, there's services that you can get, and I can't remember the name of it off the top of my head. I know this service is called Flashback, but I don't know who does it. It's basically a Outlook data mining product, and you can just type in like Outlook data mining, and there's a couple that come out, and there's one called Flashback that will actually go through all of your Outlook database, and it automatically builds a database. So if you haven't been really good about building your database going forward, you can pay for this service, and it will pull out of the contact information and put it in a spreadsheet for you. And then you can upload that into a CRM system. But the better you are at tagging your database and really segmenting them, and the more that you stay on top of that and start to build that as a resource as a business owner, the more that you can go and look and say, okay, you know what, for 2019, my goal is going to be to really refine my database and to see how I can turn my database into a revenue generating machine. So not only marketing it to your database, but, go pull your LinkedIn contacts. There's a way you can download those, upload those into your database, do the flashback, do different things where it automates that building of the database. And then even if you have an assistant who is making notes on more important contacts, you can go through and say, okay, I own this kind of business. Who else do I know, or who else could I meet that could utilize my customers where it's not competitive, but there can be a way where I can either affiliate market to them or do something else where I can build those revenue streams up and have an additional stream of revenue coming that I'm not doing anything for.
Yeah. And it's all about it's all about the business community. What I found, this is very interesting for me, I didn't start out planning to do a show, Savvy. I had actually done consulting, financial consulting, but I did in actually the corporate world. And it was my ex-boss who said, hey, you should go do this. You'd be a superstar as a business owner doing this. And I said, hey, podcasting would be a great way to market, PR, build my credibility in this area. Get people to know me as this is a business, not just me as an employee. But it turned into its own entity and its own revenue stream, and also has brought together a wonderful stream of clients, guests, and people who have now done business with me. And what I think is interesting, and I think what's cool, Joy, is to recall or remember that as a business owner, to to kind of be on the lookout for opportunities like this, because who would have thought, okay, you build a podcast, now people come to me, how do I build this and make this into money tomorrow? And it's like everything, nothing is built overnight. People who want to start a podcast and maybe do advertising streams later on, it can happen, but there is a lot of front end work and building that platform. And is it something that's well spent for your particular business and what you're trying to do? I mean, every person's got to look at it for themselves, but really just staying open to the possibility of opportunities in all different forms.
That is so true. And such wise words, Yeah. I think sometimes people try to diversify their revenue streams. And, one of the problems is they really end up also trying to do things that are taking a lot of time and take that focus away too. Like you said, like it's not an overnight thing. It's something you have to build. And so, really looking laser focused at what can I do to build passive streams of income too? That's like the, the gold standard is, and, sometimes those passive income streams can be, can come to you when you're least expecting it. When I had my PR firm, there was one of the potential clients who came to me actually was a lending company, and they did loans and investment to companies that were in the tech arena, which was my client base. And so because I set it as a goal and because I had it in my head that I wanted to build these passive streams of income, I actually started to keep a sheet of all the different, kind of in my database of all the different potential referral partners, because I set that as an intention.
Yes.
And so anytime I would have a conversation with people, because I set that as an intention, it's almost like setting a search parameter on the internet, right? Like you're not going to find anything if you don't program your brain. So I program my brain, look for passive revenue streams. So a light bulb went off when I had that conversation with the technology firm, and I was able to refer them a client and get a commission there. But had I not set that as, kind of an intention, it would have never happened. So I would just say really setting that, like almost your first priority is setting intentions, right? So build your emergency buckets, fill your buckets, start to look for ways you can invest long-term, but simultaneously set the intentions of, okay, you know what? 2019 is coming around. I've got a goal. My goal is going to be to set the intention to have passive income streams. I'm going to build 2 by the end of the year. And passive income, that can be you invest $2,000 on an online investment platform with a great company, any company out there, and you get a little bit of revenue coming in. Those could be quarterly checks of $25, but you know what? It starts slow, build, build it, start to, to get those passive income streams coming in, build up that principal, but then also set intentions of how can I build my database? How can I figure out how to mine that this year and look for new partners? Sorry, I've got some passion behind it.
I know. That's awesome, Joy. And it's so true. I mean, you think, well, it's only $25 or $50 a month or whatever. Whatever it is, it's something that you didn't have before. And you're getting started. Like everything, I think sometimes, myself included in the past, you think, well, if it's not generating a lot, it's a failure, it's a bust. It's not. Start slow, let it build, and then, the momentum will pick up as long as you're keeping at it. Now, here's something interesting. We were doing some live events a couple years ago where I had said to people in my referral base, I said, hey guys, we're starting this live event where we're going to have a networking event and interview folks in front of a camera live, and then get to meet and greet afterward. If you know people, send them our way. We'll give you commission if they book a table with us. And there were some people who made a couple $100 on each of our events from just referring people to us that booked tables at the event and became a sponsor. And it was like, it's something I just thought, hey, and so we all were win-win. We got our sponsors for each event, and they got commissioned. And so this is, you don't have to do it alone. There's a community out there. You just have to reach out and find the strategic alliances that can work as a win-win for everyone. But it's just keeping, like you said, that intention in your mind of this is what I want to do, and then keeping your mind open to it. Because if you don't, like you said, put the search parameters, you're not going to be aware for when those opportunities pop up.
That is so incredibly true.
Yes. And I don't want us to leave here, Joy, without people finding out more about you. And where can they go? Can they go to Upside Avenue? Where can they go to find out more about you and what you're working on?
Yeah, so they can go to www.upsideavenue.com and we've got a ton of content. We've got white papers and blog posts. And, the first step in anything is to educate yourself. So tons of free education. I'm a regular contributor to a ton of different media outlets. You can read articles or hear podcasts like this phenomenal one. Right from our site, we've got a ton of different content. So we would absolutely, love for you to go to upsideavenue.com and learn more. And then that'll take you to all the other sites that, like Savvy Business Radio.
Yay! Well, I'm so grateful you came to share your wisdom today on this very important topic. You don't have to struggle anymore, entrepreneurs. There's a way for you to build passive income so you can actually enjoy life, because you didn't start a business to work for it. You started a business to work for it, to work for you, and to bring value to the world. So let's make that happen. So Joy, I just have to thank you again for coming to Savvy Business Radio.
Thank you so much for having me.
Savvy Business Radio broadcasts worldwide via a large podcast network, celebrating business owners, entrepreneurs, influencers, and successful individuals. Find out about our paid sponsorship opportunities or how to become a guest. Call 732-474-7375 or email Christina@savvybusinessradio.com.